Good morning, everybody. It's a Thursday, the 5th of March, 2005. Bank of England has decided to keep interest rates unchanged, and they are maintaining their asset purchase target. In a couple of minutes, we're going to have the ECB make their announcement. Boring. We'll watch that, but let's do a whole bunch of technical analysis as well. And prepare ourselves for non-farm payrolls tomorrow. Smell like a plan? What do you stink? Remember, trading with leverage is risky, appropriate for everyone. Your past performance, good or bad, does not predict future results. So always stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Yeah, I just got a little error message pop up. Can you guys still hear me and see the charts? Adobe Air said, error. Oh, okay, good. Excellent. Excelente. All right, so, yeah. We got the ECB stuff coming out. Fine. Right now, by the way, let's do a quick wrap around the world. British pound has been, fairly strong overnight and is now neutral. Euro is getting strong. Perhaps just people getting out of their short positions going into the announcement coming out any minute. So it's been weak, and then all of a sudden, just in the last couple hours, it's less weak, which means on the short term it looks strong. Swiss franc was weak, was strong, was moderate, was weak, was strong, moderate, weak now. It's just all over the place. How about Japanese yen? Started moderate, took off like a rocket, and then dropped like a ton of bricks. That's what I want to hear, huh? Remember, it was 2 or 3, 4 days ago, yen was really strong. I'm like, all right, well, I don't really want to buy yen. I do understand why it might be strong, and I just don't know how long it'll be strong. So I'm going to identify 2 or 3 levels of support and look down there to buy them. You guys remember all that nonsense? Yeah, well, that's set up for a trade. So we'll come back to that in a little bit. But that's what we're supposed to do, right? Oh, well, I'm a bear on that, and it's strong. So I guess I'll just look for 3 different levels and wait. Remember, and then I went into patience and discipline, and that's the key to success, and identify when the market's just mispriced everything and then help normalize the price. I mean, that's what we do. It's our job. Okay. All right, US dollar has been quite strong overnight, and it's still fairly strong. Aussie, strong week. It just it's been up and down and is right now neutral. Kitty CAD tried to be strong for a while, couldn't hold that position, is now neutral. And Kiwi, weak. Kiwi is just started at the top and worked its way down all day. So that's where we stand right now. S&P 500 up 0.018. NASDAQ down 0.26. 10-year T-note yield 2.12. Boy, I wish that would go up. Oil, $52, well, 51.80. USDN back above 120. 1, 2, you rock. Cool. Euro USD 1.11. 1, 2, yuck. All right, what is it now? 110.60 something. Woo-hoo-hoo-hoo-hoo. Thank you, Euro. What else going on? CAC up almost 1%. DAX up over, let's say it's up 0.2%. FTSE up 0.5%. Cool. All right. So let's, well, first of all, Oh, hang on. One thing that I did want to cover, challenger reports. Okay, what are the three things that I look for in predicting non-farm payrolls? ISM services, employment subcomponent, weekly jobless claims, ADP unemployment, and the Challenger report. The Challenger report is a report of mass layoffs. So it's like 10 or 20 or whatever the magic number is. If a company goes on and let's say lays 50 people off all at the same time, they are able to figure that out and add all that up. And so I throw that in, usually as a discount. So you take the other components, weekly jobless claims is another one, and weekly jobless claims, so you could take like an average over the month and whatever. Throw it all into the pool, into the witch's brew, stir it around a little bit, and then at the very end, throw in the Challenger cut. So let's say your analysis says NFP is going to be 280. Then you say, oh, almost forgot the job cuts, right? The mass layoffs. Take the Challenger, throw it in there, poof. And this month, the February Challenger job cut report says 50.6 thousand. So if you thought it was going to be 280, you got to readjust and it's going to be 230. Nice, huh? Are you doing that kind of analysis for your non-farm payrolls? Well, I guess that's why I'm here to help. You're like, I don't need to do that crap. That's what Wayne does for me. All right, cool. Okay, about 2 minutes now till the ECB. All right, so anyways, while we're waiting for that, let's go back to this USD yen that we so casually talked about just a couple of days ago. Okay, it fell quite dramatically, so we set it up, said you'd probably look at it like a head and shoulders, sell it off the top. It came up there, and then it actually went up there, so that could have been a buy. Then you hit this, that could have been a sell. And we played the numbers here off the midpoint psych level and the central pivot point. Look, it respected both. And then the long term, we were hoping it would go up. We weren't so sure. Could have been repatriation and all kinds of things, but we didn't know. So you pick your spots, right? So we were talking about like in here or in here around 1900, sorry, 119. Could have been a reasonable opportunity to look for reversal patterns to the upside. And well, the first one held, and it's gone from 1950 to over, it's only 50 or 60 pips. But that's our job. Price was falling. We didn't freak out. We didn't chase it. We just set up the next trade. That's the way you do it.
110.85. The Bund futures seals about 3.85%, just fractionally rated momentarily. Still waiting for the ECB.
We're like almost 500 pips from the top of that trade setup from last week.
Unchanged across the board there for the ECB. No changes in any of the key rates as expected.
But do you guys remember like a week or so ago, we had multiple trade setups and we were talking somewhere between 300 and 500 pips per trade setup? I did a whole day where all we did was swing trades. How many people remember that? They were here for that. A couple of them started out well. You might have been up 100 pips and then it came all the way back and something like that. But that was probably one of them. Remember, we were not going to shoot at rabbits. It was just going to be an opportunity cost. Right? So anyways, I hope that kind of stuff helps. Now, the funny thing is the euro was the least attractive of the bunch. But that's what we were talking about here. The only thing in play, it wasn't an oscillator play. The only thing in play was the moving average. So anyways, nice. Let's go back. Oh, by the way, could you hear the results of the news? I assumed you did. I use tradingthenews.com. ECB leaves main refi rate unchanged, 0.05. Deposit rate unchanged at negative 0.2. Leaves marginal lending rates unchanged at 0.3. So no surprises there, but at 8:30, the governing council and Draghi, the chairman, will do the press conference. And, you know, during the Q&A, something could happen. Okay. So that's that. That's a nice little setup. Again, we're shorted around 15 and a half, and now we're at 110 and a half. Cool. Let's go back to what we were talking about before, USD. This was just from like Tuesday, I believe, somewhere around there. And that's what I want us to focus on was this, and this is the simple pattern. Price was falling at the time. We discussed it, that the group felt like the fundamentals indicated this should be going up. We understood why the yen might be strong based on possible repatriation flows due to the fiscal year end on the last day of this month. But so it was coming down, but we thought it should eventually, if not today, certainly next month, be going up. So the best thing to do was to look for levels of support. We saw it somewhere between 119.5, which is a midpoint psych level up here, and the central pivot point. So that's why we marked it out as an area to look for reversal patterns. So on and so forth, and now it's up here. It could have gone a little farther. The next one I think we had marked up was around 119, so it could have come down a little farther and then headed up. But that would have bothered us because therefore it was probably going to make double top. If this held, it would probably make a higher high. Cool. Another layer, another component that you can take on a scenario like this is you long it here, and then you place a binary in case it falls to the next level, and you'd cover your expenses by about 40%. You cover, you make back your losses by 40%. You reduce your loss by 40%. And that's a hedge. Just like an insurance policy is the way you think about it. I think it's going to go up, but if it falls, I won't lose so much. Okay? So anyways, but you could look, I hope it seems obvious now, but I hope I hope that you'll begin to see how obvious it is in future setups, right? If you're a bull, where else would you possibly buy? Was there really any other choice? Yeah, way down in here. But that we had that one ready too, didn't we? And after that, we're probably just not bulls, right? Cool. But thinking ahead is where I'm trying to get you at. Okay, thinking ahead and putting it. So would you buy it now? Would you buy this pair now? No, you shouldn't. Okay, but it could do this. It'd be the exact same price, but a lot less risk associated with it. And you say, well, Wayne, what's the big difference? What's the deal? I mean, if it's going to go up there anyways, I might as well just buy it. And I say, well, there's more risk. But you're like, you think it's going to go up there anyways? Just do it. Why should I wait for it to go up, come down, and then do it again? Well, that comes down to the patience and discipline thing. Go ahead, do it. Yeah, you'll probably make money today. Good luck with that. Yeah, I'm patient. Yeah. Where's the trade? No, Joseph, thank you, though. Joseph, sit down with a licensed financial advisor and have them, diversify you, and then focus on your health. Oh, good? Okay, good. Yeah. Yeah. Okay, so that's that. Great. What should we do next? Kiwi Dollar is a good one. It's probably the second best mover for the day. How pretty is that, huh? So it's a long way down. How far do you think it's going to fall? Any ideas? $75. Well, we're basically there now. That's not saying much. And you'd think it'll fall another 4 pips. Good. Yeah, well, we are at support, right? Would you mark this up as an area of concern? Let's look at it on hour. Let's just add a little more time. Yeah, that seems to be a supportive area, doesn't it? You can grab this down, kind of catch all that stuff. That puts it into context. We had that as a short zone a month ago. You guys remember this whole move? It was laughable. We were down in here, and I set this up. That's patience. How many people remember doing that? Anybody? It seemed like an absolute million miles away, right? Just a couple of people? All right. So that's the patience, right? So I'll tell you what. It could do this, or it could do this. But the setup here is just the simple idea of, on a very high time frame like a daily, down, test, down. Now, I'm not necessarily hoping for the Kiwi dollar to fall, but I do anticipate dollar strength. And you know that. I mean, I talk about it every day. That's what I want. Okay? So there it is. There's the daily chart. If you recall, this was the possible 382 entry for Fibonacci retracement. If it was going to drop, it was going to do that. If it's not going to drop, then it's going to do a higher low, higher high, higher low, higher high, right? Which it's done. There's the low. All right, here's the high. So it's done that. Now it's in this zone, which is a roll reversal, and I believe it's a Fibonacci retracement. So we just might have the potential for this now on smaller time frames. On this time frame, let me just change colors. On this time frame, it's pretty simple. Break below the lowest low, retest, make a new lower low. So I'll ask again, what do you think the target is? It's not 75. We just broke 75. What's the target? Oh, I'm not going to be able to draw this properly. It just there's a glitch in there. Get rid of that. So at the very least, you would bust out a Fibonacci retracement to the lowest low to the highest high. I'm going to change the time frame now. And okay, so let's call it a 618. That predicts which Fibonacci extension? Jim's maxed out 74.42. Come on, guys. I'll give you a hint. This was one of the original shorts worth hundreds and hundreds and hundreds and hundreds and hundreds of pips. All you need to do is be patient. Okay, 618 predicts a 1382. All right, so let's take a look. I love it. I'm patient. What were you talking about again? Oh, well, that was like 3 days ago, Wayne. All right. How about 69? Not your 74.40. I spit on your 74.40. That's what we're talking about. So let's just play it as 70, 70-ish, because I think the psych level is going to be challenged. Does that make sense? So, I mean, do we have to hang on for those extra 85 pips? So, this is full circle now. When I asked, you remember last week going over multiple trades worth 500 pips? There's one of them. All we had to do is find a place for it to fall. Now, has it begun to fall? Yeah, probably. Well, probably is too strong. we are near the zone in which our analysis said it had a high potential to drop, break, and trend. Next, ring a bell? So when I say the fish are going to jump in the canoe, do you go fishing? No? Wow, you guys got quiet. So talk to me, Goose. Are you mad? Are you upset? Are you mad at me? Are you mad at yourself? Do you not like it? Yeah. Well, the thing is, has the analysis helped your understanding of how to set up a swing trade? Because that's what I'm here for. Okay? Cool. Now that's serious patience, isn't it? And the thing is, when we're in the moment doing our analysis, we don't know if it's going to fall here off the 382, right? We don't know if it's going to fall off the 50%. We don't know if it's going to fall off the 618. We don't even know if it's started. Okay? So what are we looking for now? Let's get below this area. And the next thing is that's a lower low. Then how about a lower high and then a lower low? That would be very convincing by then, right? Once again, same price of where we are now, just less risk associated with it because it's hit resistance, made a lower low, and then you shorted the lower high. Bada bing, bada boom. But this is all very, very predictable because we talked about it in here. So it looks like that actually, almost a month ago. I remember doing it. I just, I'm not good at time and days, and I talk to people, and very often it's tomorrow when I'm talking to them, right? I'm very time when you sit and stare at your charts and time zones and everything, and I'm not so good at that. So it happened like 3 weeks ago, not 3 days ago, but it's all the same to me. All right. Cool. Well, so now what? Now it's up to you, my friend. Is this what you're going to do? Do you really want to be hardcore short the Kiwi that way? Is there something else? Is $0 going to do that even better? Right? If a high yielding currency does that, what about a low yielding currency? What about our friends, the Aussies? What are they going to do? So on and so forth. Because remember, if the Kiwi falls, it's probably a falling tide. It's probably unbelievable, ripper strong US dollar. But maybe it's a commodity play. Maybe it's a Chinese GDP play. Maybe, whatever. It's technically made a lower low. What are you going to do on a 15-minute chart? Are you going to set up a lower high trade in Asia? Okay, you need to be doing your work. Well, I think Jim asks, what's the fundamentals behind it? There could be a commodity move about to happen. If you recall, we discussed how a very large bank's chief commodity um, strategist talked about Cushing, Oklahoma running out of storage for oil and predicts oil dropping to or could, he doesn't predict it, says if it does happen, oil could drop to $20 because it's going to be reported on the news that there's so much oil in the United States, we don't even have a place to store the stuff that we're not even using yet. So, a gluttony of oil. So what we had talked about, I don't know if it could have been even yesterday, but maybe the day before, the oil could go up into this area, okay, the weekly R2, monthly R1 area, which is already, from a long time ago identified as resistance. And if he's right and it hits the news, then we're looking at a $53, $54, $55 a barrel scenario dropping down to 20. Another, 50% move down in oil. That's what he's talking about. But if there's some level of truth to that, because sometimes these guys, they just want to get on the news, so they come out and say outrageous things. There might be a reasonable idea behind it, but you have to say unreasonable things to get people to listen. Well, the other side of that equation, Jim, is that if there's no more oil, place to put oil, you're going to have to cut production, draw down the inventories, and then that would drive up prices. Now, keep in mind, every Wednesday they tell you the oil inventory will build up or draw down. Thank you, Department of Energy. So that is being discussed already. See, I don't turn the TV on. I generally don't listen to the news. Yeah, YJ, send me an email. Let's get you focused on stuff that we've been talking about in the past. Yeah. So anyway, so there's oil. Cool. Yeah, and Jim says, it's hit the news now, but still hasn't fallen. Well, remember, when we did our analysis, we also wanted it to rise up into resistance. Because I think when we talked about it, I don't know if it was Monday or Tuesday, but we were still pretty low. So the idea is, well, this is not really a great area to sell. So what would be a good area? Well, here's support. Here's resistance. Wait. All righty. Oh, gold. Go back to gold. Remember last time we looked at gold, it was at 1,200. I guess I have to do it here. Do you guys actually care about gold? Should we do it just once or twice, or should we do it every day, or once or twice a week? Oh, look at the S&P 500. Look at that. Look at our target. Wow, that's crazy. Look at this. 1618 to 1382. Wow. Nice. Dang. Nailed that one. Too bad I didn't trade it. Gold. Look at that. Still $1,200. Like, to me, I always look, gold, I think there's better things you could be doing with your time and money. That just proves it, at least on the short term. What should we do? Aussie's still moving sideways. Oh, I might have missed an elementary point. Let me ask you and see if you remember. The Kiwi Dollar trade, why did we discuss it, quite frankly, for the short, even though at the time it was still rising? What set it up? Remember, in one particular day, I said, look at this trade, this trade, this trade, this trade. We went through 2 or 3 trades, well, 3 or 4 trades. Each had the potential. And you know, that S&P 500 might have been a trade. But anyways, each had the potential of 3 to 4 to 500 pips. Do you guys remember what set that up? I believe we set up the pound dollar to fall. We set up the Kiwi dollar to fall. Euro, I mean, goes without saying, but even euro was one of the least potential, even though it was trending, right? There was other reasons for it. What was the other one? Aussie dollar was going to fall. Does anyone remember? Right. The daily stochastics, right. So let's just very quickly, because I want to drill the lesson home as far as using your tools properly. Remember, it doesn't put you into a trade, but it puts you on the edge of your chair, getting you ready. Okay, so you go to the daily. Okay. Hang on. Okay. This is what we were talking about. So that's the daily chart. And it was only like shields up, red alert. If you're a bear, there may be an opportunity. What we need is resistance. But if you believe the trend is down, if we're at resistance, that gives us permission to start looking for reversal patterns and smaller time frames. Now, does this ring a bell? Because I want to go through a couple more charts. Another one was Aussie Dollar. Okay, this one's still set on the daily. Okay, you can see all our analysis. We were hoping it'd go a little higher first. But what even gets you looking for the short? What even gets you thinking about it? Look at the daily oscillator. Now, British pound had been very strong recently. Right? British pound was really strong recently. And yet, we were looking for a potential short. On the daily chart, look at the oscillator. 80% overbought. All you need is resistance. I wonder if we found some key resistance last week. Oh, the reversal zone? 55.55. Bearish engulfing candle. Fibonacci retracement. Bearish engulfing candle. Fibonacci retracement. Bearish engulfing candle. And now we're at the reversal zone. Okay. A euro we had as a fall because of the daily 21, but there was no oscillator on that one. You know, and let's even go back. I just want to, because I don't remember it, but it looks so good. We might have had that set up on the S&P 500. Let's go to the daily chart. Yeah, look, guys. So we used one idea. Look at that, guys. 90. 98% overbought. Okay? And this looks like it was the Fibonacci retracement after a bearish engulfing candle. So that was Kiwi dollar, Aussie dollar, pound dollar, S&P 500, simply overbought at resistance. Now, I want the S&P 500 to go up, so let's be clear about that. And I hope pound dollar eventually goes back up, but I think it just needed to happen. We might be in a role reversal. I definitely want dollar to be strong. I definitely want the yen to be weak. Aussie, I'm not so sure about Aussie. We might be fairly close. I'll give you an example of what I do with my free time. I sent a message to a reporter at Bloomberg. This was 2 days ago. I mentioned it yesterday, but I actually was reading through minutes. It was like, I don't know, a 9-page meeting minutes. No, I'm sorry. It was a speech. He gave a speech somewhere, and I read through the entire transcript and noticed like little things that they're starting to discuss that they were not starting to discuss. And so that's why I start to develop these opinions. What percentage of the market do you think are paying that close attention where you're trying to like read word for word the opinion and statement of a particular person in power? But I feel like that's my job, and I do it because I like it, actually. I remember about 6 months ago developing an even more bearish outlook for Aussie before they restated the lower low at 75. The finance minister of Australia gave a speech at a dinner. It was at a Holiday Inn, of all places, to a group of finance officers at various businesses in Australia. And so it was a finance guy talking to a bunch of finance guys about the Australian economy. And he just unleashed a phenomenal amount of very interesting information. But I was actually reading his PowerPoint presentation. And I think I had an audio. Yeah, I might have had an audio file as well, but I was going through his PowerPoint presentation. He was telling us like 80% of Australian debt is held by foreigners, and there's no way for them to actually know who the foreigners are, and just like fascinating information. And I've gone to the point once where I read and the entire PowerPoint presentation by Carstens. Carstens runs which central bank? Does anybody know? He was giving a speech about his economy, was laying out all the fabulous information about it. He runs the Central Bank of Mexico. Now, of course, the whole presentation was in Spanish. And I don't speak a word of Spanish, except sí. Muy bien. That's as far as my Spanish goes. And yet that's the level of not just dedication, but I guess fascination and enthusiasm that I have for what we do. Nah, just look at it. I get it. He shows me some bar charts of consumption or GDP. I mean, I can get it. Blah, 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 GDP. Blah, 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 inflation. What I do is I cruise through the websites of central banks. See how smart I am? I'm like a Forex hacker. all the information is out there and available, and 99.9%, and I'm telling you, even the hedge fund managers with billions of dollars available to them, they don't do that kind of work. They don't. They just don't. You think they would? In fact, you would hope they would, but they just absolutely don't. But some of the best resources out there, federalreserve.gov, just a fabulous amount of information, right? The Fed, Kansas City Fed, San Francisco Fed, New York Fed, they all have all these fabulous tools and resources. You can go there. They have resources for teaching, like for teachers that are teaching elementary school children, and they have these courses laid out to teach them, like, what is money versus, money versus wealth, and where does money come from? I mean, it's just really interesting stuff. If you're fascinated about what we do and want to master your domain, you can spend some, turn off Dancing with the Stars and cruise the central bank website. You might learn something. Another really good one is the IMF. Now, the IMF pumps out a ton of information, and a lot of it is like purchasing trends in Congo. All right, fine. They do a lot of developing nation stuff. Obviously, it's the IMF. But they do quarterly and biannual reports that are fabulously interesting and full of amazing macroeconomic information. Maybe one day I'll compile a list of these things. So I'll tell you what. Let me end the presentation here, but don't go away yet. Hang on. So I'll stop the recording. I'll upload it to YouTube. You'll watch it. You'll like it. You'll subscribe to get more. But I'll leave the room open, and we'll listen to the Draghi speech together as a team. Since you're a client at tradersway.com, you either have a demo account or a live account. So how about that for a super extra free happy time bonus? You guys want an extra free happy time bonus from tradersway.com/WayneMcDonald.com? Yeah? All right, well, let's do that, huh? So again, if you're watching this video on YouTube or in a different website with the YouTube video on it, hey, why don't you swing by tradersway.com, open a demo account. Honestly, it takes less than 30 seconds, really. And then you're part of our crew, and you can attend these events every single day for FREE. Peace on earth. May the pips be with you. May your profits be above average. ECB, here we come.